Well, good day. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening, as we're here now on Monday, the 16th of June, 2024. Hope you had a great Father's Day. It's certainly an interesting time. You wake up in the morning, and I get up. When I sleep, it's 4 or 5 hours if I'm lucky. And it's all I've ever needed all my life. It's so strange. And I read a lot, then I'm watching financial TV to catch up, and I'm down in the office working instantly for you. And I can tell you, you wake up and what I'm nervous about are people going to get desensitized to tariffs. Seems that they have already. They're there, but the market is within striking distance of all-time highs. That didn't affect the market. Not that much. What about the war between Israel and Iran? The shock of it takes over. We all turn on CNN because they've got fabulous coverage of it, especially in the evenings and as all the bombs are coming in and you're watching it go on. Their coverage is always great on that. But do you become desensitized is once you've passed the first 4 or 5 days and you're into week 2. Do you see what I'm saying? That could be the case. That situation, you saw at the G7 today, the president talk about it. I think he's taken the attitude that both sides got to hurt each other a lot more before anything could be done. The word on Iran's part that they want to be flexible, they'd like to speak now to the United States. Let me tell you about the word flexible. Stick it, buddy. Flexible means we will give up uranium enrichment. That the U.S. will accept, and I think Israel will accept. The idea that they're going to keep uranium enrichment, this war keeps going on. It's really pretty much how it's going to be, in my opinion. Does it have to be that way? Yeah. I'm a proponent that they have to give up uranium enrichment. They can't be trusted with it. The world doesn't need a set of nuclear weapons in every country in the Mideast, and that's what it opens the door to. You can't have that. So it's got to stop itself. That's where I see it. All right. So do we have data coming up? Yeah, but you have your Father's Day sale ending today. So today, June 16th, at 11:59 and 59 seconds p.m. Central Time, it's over. If you want to take advantage, go to the website. If you're on my mailing list, you already got the information. 1/3 off. You can either do this for, purchase any quarterly subscription. I mean, it's so simple to do, and you get 3 months for the price of what? 2. Pretty good deal for you. All right. You'll see the icon up throughout the whole show. In terms of news, there's a massive amount tomorrow. You got import-export price data at 7:30. You got advanced retail sales at 7:30, and Redbook comes out with retail sales, so a lot of retail sales. Then we get the monthly industrial production and capacity utilization from the Federal Reserve at 8:15. National Association of Home Builders, they're going to release their monthly market housing index, and that comes out at 9. Then we get business inventories at 9 as well. At the end of the day, we're going to get the API. They're going to have their member stockpiles data. So that's where you're at. But when we talk about the G7, when you talk about that, it's country upon country meeting with President Trump. As you know, there's but one deal that is down on a piece of paper, and that's the UK. It's not a finished deal. Starmer and the president are working that out right now, I understand. They've worked it out possibly, and the aides will finish up whatever they have to. But the two are heavily in agreement. They have found a way to remove steel tariffs. That's very important for the UK. They can send steel here. Their car tariffs are going to go down to 10% from 27% on the first 100,000 cars that they ship to the U.S. That's an awful lot of cars, by the way. They're welcome to manufacture here, and then they don't have to worry about the tariff. And, of course, the U.S. is going to be selling, I understand, meat, our pork, our beef. That'll be sent there, as well as energy. So this is all very exciting, and it sets the framework for the other countries, be it Mexico, who's there, Canada, who's there, Japan is at the meeting. You've got 4 or 5 countries that have come in that are not G7 members. So There's a lot going on, and the U.S. has already said via the president they will not sign off on any statement that has to do with de-escalation of the Israel-Iran conflict. In other words, the U.S. is staying away. And that's probably the only thing the president can do at this time. He doesn't want us to be involved, but if we have to be involved and if somebody gets stupid, we have our second carrier group, the Nimitz, on its way there now. You know, when you see one of these carriers, I don't know how many of you have ever seen in life a real aircraft carrier. I mean, it's monstrous, and you understand what it can deploy, and now you got two of these carrier groups in the Mideast. They're ready for whatever's there. That's just our ships. What about the rest of the allies that are there? So they're there to help Israel. Make no mistake about it. I didn't say to attack Iran, to help Israel defend itself. Israel can do all it needs probably on its own. They've been clever so far. Why not continue with that? What Iran has to do, and I want to repeat my view, you can hate it, like it, just give up the uranium enrichment. It's over. Could it be easier? It's right there on your doorstep. All right, so let's keep going with where we're at. Let's take a look at how the markets are doing tonight. And what you've got is a bit of a correction taking place, but you get that way each night. And then the guys come in and they start bidding up on the brakes and driving the market back up. We are spinning our wheels. You're getting a bid again into the energy markets, as you can see. Bonds and notes, well, now you've got the two-day FOMC meeting beginning tomorrow. It's not what the Fed chair says on Wednesday at his press conference and the statement just before that. It's the dot plot, folks. You want to see what the members as a group are thinking right now. You don't know whose plot is whose. That's by design. But it'll give you an idea of what they're thinking. Are they saying as a group, we should see inflation and we can attack that? Or are they saying we're not getting the inflation, the economy's slowing, and we can attack that? I don't know what they're going to attack. Labor market hasn't fallen. Inflation hasn't gone the way that many, including me, thought it would go. I mean, I'm not seeing the impact of the tariffs. I keep hearing it's coming, but I haven't seen it. Okay. Bitcoin slipping back as well. Notice I've made a lot of monthly changes on everything you're seeing here. All of the currencies are now the Septembers that you've got to be into. I still think you watch July silver, July copper, and July platinum, but that'll switch over in about a week or so. All right, and I made changes in the energies too, so I want you to be aware. It's time to make those. When we look at the S&P, it's very clear. This is your high on this weekly chart, 61, 62, 50. I mean, any way you want to cut it, the market's hanging around the highs. And when I say that the market becomes desensitized, and I've been using that word recently, it's because the tariffs, we're desensitized to it. The market came roaring back from that tariff all the way up here. The longer the Israel-Iran war goes on, you will become desensitized to it. You won't be turning on CNN the way you do every day now, and you won't be looking at the horrifics. We know it's going to happen. We know neighborhoods are going to get destroyed. Israel's going to take hits like they've never taken before. The systems can get overwhelmed. The Iron Dome is not perfect. It's good, but it's not perfect. And we will see just how much devastation. Does the public have a stomach for it? I already saw one person on TV in Tel Aviv, a woman. She was wearing a hard hat, taking one of the news people through it, and she said, people can't live like this, we're leaving. See, that's going to happen in a certain degree. So don't think that, oh, it's all this resolve and it's going to work out. There's problems. All right. When we take a look, you can see how the chart has just come up here, and this is the daily bar chart, and you're just sort of hanging around, and you're really not trending. You've gone basically sideways over the past week and a half. You have a higher high and a lower low, and you're sort of churning at this point, and all that churning is happening against and just over the 18-day average of closes, keeping what I define as bias to the upside. Bias doesn't mean that the trend is going with it. In order for me to say an uptrend's at work, I'm not blind. I can see this. But when you're a trader, you start looking at the shorter term. And when you're using futures, you better be looking at the shorter term, because the leverage is very painful if you're wrong. If you're right, it's called heaven. If you're wrong, it's called, starts with an H, ends with an L. So we have the higher high, lower and low, and we have a Bollinger Band where the market is sort of sitting in it, but it's not narrowing in. So the volatility hasn't yet really come out of the market. And momentum, well, what happened here? Oh my gosh. If we take a look at the slow stochastics, let's see if I can get this to move for us. It's not moving. I can't do anything. It was embedded there, fell back, and playing games right here. That's where the market gets hurt. The reason this isn't moving, I moved this over so everybody can see the numbers in a better way. Let me get to the NASDAQ. I slipped over that. So in the NASDAQ, you've got it where you're losing the bullish embedded reading too. So the markets that had bullishness going forward, it's stepping out of the market. Wouldn't surprise me if you lose it, that you slip back to the 18-day average. Obviously, the upper Bollinger Band held the market in check. And if you lose that reading before you go up for that high, my theory, doesn't mean it's always right, is that before you go for that high, when you lose the embedded reading, you go back to the 18-day average to regroup. When we look at the Dow, you never did embed. You just got overbought. You were able to get through at the end of last week the 100 and the 18-day average. The market tried today to get down to the Bollinger Band, couldn't make it, and it's still hanging at those two moving averages. I call this neutral right now. In the Russell, again, you're fighting that battle, right, just like the other. So what the markets have done is, instead of thrusting up or down, they've settled back into the line in the sand, the 18-day average of closes, looking for direction against it. In the DAX, as you know, when you had lost the bullish reading here with the embedded reading coming undone, I had been looking for this 18-day average. It took until Friday to get right through it. And today you had a rally back to it, and that's about it. But so often, momentum will lead price, and if you learn how to work with it, I think it helps trading. When we look at the bond market, why get involved in front of Wednesday's meeting? And I'm going to repeat, I don't think it's what the Fed chair says. What can he say? He doesn't know if he's fighting a bad labor market, which hasn't really weakened. I mean, 130,000 jobs a week is still a great number. We're not seeing the jobless claims go crazy, and we certainly haven't seen inflation taking a big bite out of anything. So why should he move? What's he getting ahead of? That is the question. And the market's convinced that he has to make cuts because the economy's going to fall. Everybody that's saying that has been wrong. 6 months ago, all you heard is we're going into a recession. The question is, how deep is it? That didn't occur either. Don't get caught up with everything. Let the data tell you what the reality is. And yes, the data is always in the back. It's not forward looking. But the data we're getting isn't showing the weakness to make the Fed change its policy stance, in my opinion, just yet. When you look at the 5-year note, does it get more neutral than just hanging at these averages? I don't think so. And sideways. In the dollar index, lower highs, lower lows. Now, we've opened up on what we call our price counts, the ability to get down under the 90 level. From where you're at right now, that's basically another 10% drop. You realize how big that is in this currency? But that cushions the U.S. economy. It cushions it a lot. People are going to be able to buy our goods. The tariff, okay, they'll get that, but the dollar offsets a certain amount of that. See what I'm getting at? There's things that can be done here. We'll see. Trump wanted to engineer us a weaker dollar. He's done it. I don't know what turns it strong. That's the problem. I keep looking for the reason. Are we embedded in the market? No, not yet. It's trying to embed. It could do it very shortly. Then in the eurocurrency, you keep running up to the upper band. Are you going to get a bullish embedded reading here? It's working on it. Not quite there. So nothing's coming off in those numbers. I thought the British pound would have resistance, as I told you, last Wednesday and Thursday against the upper bands. You did. And you're too overbought. I don't think new money's deploying itself bullish here. That does not mean I'm bearish. It means I don't think new money's being deployed on the bull side when the market is overbought. When we come to Bitcoin, it's stuck at the 18-day average. And I know you're going to say, Ira, why don't you move to the next contract month? It's not how Bitcoin trading works. Everybody moves right at the last minute, and then we'll be joining the next contract month. That's just how it works. In the energies, what you've done is you've backed off the big spikes that got over the upper band, and you're just hanging at it in an overbought market. Same thing here. Remember, I've moved to the August contracts. You can see how it stayed over the bands, came down, and you're fighting your battle right against them. In the gasoline market, it's the same thing. You're fighting the battle right at that upper Bollinger Band. Now, I've made these bars bigger. If you don't like them, I'd like you to write me and tell me. If you like them, write me and tell me. I like them bigger. So they were smaller than this before. I've made them thicker is what I did, not longer or shorter, thicker. And I need to know how it comes out for you as you're watching your monitors and however you watch this. In natural gas, you know I've been looking for a lift in the market. I said the first warmer weather should lift the market. I think I've said it for you for weeks as we've been down here. You're getting an attempt. It's feeble, but you're getting an attempt. If it were the super hot weather, I think you'd be up here already. But it is going to be in the 80s in a large swath of the United States. We'll see what that does for the crops and the other parts of the market as we get through them. I think the soybeans, I saw the reports this afternoon. To me, they looked a little behind schedule. So we'll see how that all plays out later. I'm Ira Epstein. Be sure to take advantage, if you want, of our Father's Day sale. Just click on everything up there, and I'll catch up with you all in the other videos tonight. And, of course, first thing in the morning when we have so much of this data coming out. Take care.